It's a normal day, just like any other. You go to check the mail and, you've got a letter from the IRS. You look at the letter and it's a CP2000. The letter says you owe an additional $25, $50, or even $100,000. Now you're in a full-fledged panic. What do? How do you respond? The CP2000 notice. That's the topic of today's video. On the other side of the break.
1-877 Levy-King, L-E-V-Y Levy-King, 1-877 Levy-King, LEVY-KING.com.
Owe back taxes to the IRS? Call the Levy-King, he's the best. 877 Levy-King, LEVY-KING.com.
1-877 Levy-King, LEVY-KING.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877 Levy-King, LEVY-KING.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. My book has been a bestseller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, that's www.endthetaxnightmare.com, and enter your name and email, and I'll send you a copy right away. No charge, not even for shipping, totally free. Now, before we go any further with the video, please take a moment to subscribe to my channel, and don't forget to smash that like button for the YouTube algorithm. And while you're at it, hit that notification bell so you'll get a heads up each and every time we drop a new video. Okay, guys, let's dive into today's content. Okay, so what is the CP2000? The CP2000 is a notice that the IRS sends out when the information you put on your tax return doesn't match the information that they already have on file. It doesn't necessarily mean that you're being audited per se. It just means that there is a discrepancy that needs to be resolved. The IRS keeps a massive amount of data on all taxpayers, such as W-2 and 1099 forms filed by your employer. And if the information on your tax return doesn't match what the IRS has in its database, you'll receive one of these system-generated notices proposing changes to your return so that it matches their records. This is not yet a final bill. It's just a proposal, and there is still time to clear things up. But if you ignore it, it will become a final assessment, and then you'll go into collections. So here are a couple common examples of some things that can trigger a CP2000 and some typical responses to those notices. The first example involves the sale of real estate, stock, or maybe even crypto, right? If you sell an asset like your home, the profit that you generate from the sale is reported to the IRS by the title company or the attorney that you use to close the sale. If you don't file a return, or if you don't include the sale on the return that you do file, the IRS will calculate the tax that you owe based only on the information that they receive from the title company. They'll send you a CP2000 reflecting a huge tax bill. Here's how you respond. In this case, our client sold his home for $500,000. The title company reported the $500,000 to the IRS. Since my client did not include the sale on his tax return, the IRS assumed that the $500,000 was all profit, and they sent him a bill for over $100,000. But if the IRS doesn't know things, like the cost basis of the home. They also don't know whether it was your primary residence or maybe it was a rental property. They don't know whether you had any other costs associated with the sale of the property, such as closing costs or real estate commissions, or even whether you did things to increase the basis, such as renovations, additions, or upgrades. So we began by writing a letter to the IRS laying out all the reasons that we disagree with the proposed changes to the return. To prove our case, we located the closing documents from when the home was purchased and also from when it was sold. Our client renovated their kitchen 5 years ago, so we needed documentation of that renovation as well, because again, that affects the basis of the property, and basis goes into profit, right? Which also, leads directly into how much you're going to owe. So finally, we used the voter registration and their utility bills to prove that the home was in fact the client's primary residence. We sent all those items along with a complete Schedule D to the mailing address listed on the CP2000. 9 months later, the IRS informed us that we were correct and the client did not owe $100,000 after all. My second example involves self-employed or independent contractors who forget to include all of their income on their tax return. I had a client who is an owner-operator truck driver. He's an independent contractor, right? That means that he owns the truck he drives, but he works for another company that dispatches him out on runs. He's considered a self-employed independent contractor, and he's paid via 1099 for the company that dispatches him out on those runs. He made $100,000 in gross revenue from one of the companies that he drives for. The company also reported that income to the IRS. My client failed to report that income when he filed his tax return. So the IRS sent him a CP2000 stated that he owed $30,000 in taxes plus additional penalties and interest. But what the IRS didn't know is that the $100,000 the driver earned was not all profit. He had expenses like maintenance and repairs on the truck, tolls, mileage, meals, and lodging, and of course, fuel costs. Truckers spend a lot of money on fuel. So just like in the previous example, we begin by writing a letter stating why we disagree with the CP2000. We documented the client's expenses using bank and credit card documents, along with receipts from the hotels he stayed in, the restaurants he ate at, auto mechanics that he used for his maintenance and repairs, toll charges, and all those things. We prepared the returns and attached a Schedule C documenting the actual net profit from his business. In the end, my client still owed the IRS, but not as much as the IRS initially claimed he owed when they sent out the CP2000. We set up an affordable payment plan to resolve the remaining tax debt. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.LEVY-KING.com or click on the link below. Follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility for an IRS fresh start. That website again is www.LEVY-KING.com, or you can give us a call at 1-877-LEVY-KING. That's it for this week, guys. Talk to you later. Bye.